All right, traders, this is the sixth green day I've had in a row. With that being said, I'm going to be recapping the trades that I ended up making today. I started off the day hot with put options when this was at 431, played that multiple times for a couple $1,000s. Then I ended up trading call options. My first trade on calls was at the exact low of day for a bullish reversal. And then I had one more trade at calls towards the peak for a nice win. Then I had a couple small losses on puts, and then I called it for the day. I'm going to be explaining too and recapping the trades and price action analysis on how I was able to make $4,000 on the day. I'm also going to be walking you through the CPI inflation report. I'm going to be explaining to you on how I'm planning to profit on the CPI report. I'm going to be giving you the key levels, and I'm going to be explaining to you in terms of price action and technical analysis what we're going to be looking for heading into tomorrow to profit off of the CPI report. Let's get straight into the analysis. So first things first, in terms of the SPY, my main in the hierarchy level for puts was at $431.58, as I addressed in my watch list within Trader Society. That was very, very close to the pre-market highs. Basically, I noticed in the pre-market there was a lot of resistance at 431.60, like I called out in yesterday's video. And then I noticed it was forming lower highs after selling off right here. It was forming lower highs, trying to turn this little key support into resistance, which is bearish, right? So I was anticipating a drop. So I decided to hit puts multiple times when this was at $431. I would buy the 431 puts, and then I would sell them in the money for a quick profit. I did that a couple times, made a couple $1,000s. And then in terms of calls, why did I decide to buy call options for the first time at the low of day? Right? This was one of the levels where I was actually interested in puts, but I decided to do calls. And why is that? Because I saw a bullish 30-minute pattern to buy calls. And I also noticed this was very strong pre-market support right here at $430, which triggered a major bear trap. And if you just study in terms of the past and what's been happening, SPY has either been reversing at the previous closing price, or it's been reversing slightly above the previous closing price if you've been studying that overall uptrend. But anyways, the main reason why I decided to buy calls at the low of day, and this was the first trade that I made on calls, I had one more where I made a nice quick $1,000 profit as well. This is the reason. I'm going to show you. So we have to go back to the timestamp. So in terms of the alert, as always, I post all my trades in real time within Trader Society. This was the best trade alert that was given today. It was at the exact low of day. So at 10:37 a.m., when everyone was bearish, I said, I'll be buying calls shortly if we get new lows. Seconds later, we got new lows, and I bought the calls 430 strike. Why did I decide to do that? So the reason why I decided to buy those calls was mainly based off of a 30-minute pattern. And when I'm looking at 30-minute patterns, I'm always going back throughout the short term, throughout the past, trends. You could look at the 5-day 30-minute, you could look at the 30-day 30-minute, and I look for patterns, I look for similarities, I look for things to repeat themselves. And what I'm going to share with you right here is a pattern that ended up repeating itself. So in terms of 10:37 a.m., if we go to the 1-minute chart, we're going to draw a quick oval right here. This is where I bought calls. I bought calls right here. And in terms of the 30-minute candle that I bought calls on, right? This was the 30-minute candle. So the candle that I bought calls on was right here. This was the candlestick. Why did I buy those calls when SPY was at the low of day when this was a red bearish candlestick? So I want you to keep in mind that 30-minute candle did not close. It had 23 minutes to close when I entered those calls, meaning anything can happen. It could flip bullish, it could flip bearish. Now, based off of the trend that was occurring, it told me that it was going to attempt to spike and it was going to attempt to flip bullish. And not only that, but there was a lot of key support from the market open that was proven to bounce towards those pre-market lows that we discussed at 430.30. You can see there was just a ton of support at this 430.30 level, and it bounced multiple times. But this was the 30-minute pattern that basically nobody saw, and I'm going to bring awareness to that pattern, right? So what I'm doing is I'm looking at how these 30-minute candles look visually, and then I'm seeing, by going back throughout the past history, if there's any sort of pattern, history, or correlation that is repeating itself. And then I capitalize off of that. And keep in mind, this 30-minute candle was super red and bearish when I bought it. So if we were to just kind of study this pattern right here, was there anything that similarly happened, right? Basically, in terms of the pattern that I was looking at, let me see if I could find it right here. This looks completely different to me because I make these trades on my phone. But let me see if I can just visually find it here real quick. This was the pattern that I was looking at. I believe this was it. So these are the similarities, and this is the reason why I bought calls. You can see right here, you have like this red bearish candlestick, and it's basically at the same level. It's like a trend reversal candlestick. You can call this like a trend reversal candlestick. This is bearish. And then in terms of right here, you can call this like a trend reversal candlestick. So I understand the candlesticks don't look the same, but they're basically at the same level, and they both kind of represent a trend reversal. And if SPY is going to form this type of 30-minute candlestick right here, it's going to try to retest those lows, which is another reason why I was doing puts when it retested 431 and then sell into the dip, take part of the move, right? Now, if you study what happened, and this was the reason why I bought calls, you have this red candle right here. So you have this red candle right here, and it has the wick. And then what happens after that? You could see what happens after that. It goes a little bit lower, and then it spikes back. So look at this. You have this same red candle. You see the red candle with the bottom wick, and then what happens? When it goes lower, it spikes back. See how the closing of this candle closed towards the high of this 30 minutes? So based off this pattern that was repeating itself, it made 100% logical sense for me to buy calls, because the pattern said if it goes below this 30-minute wick, it's going to try to close towards the top. And that's exactly what happened. It went below the 30-minute wick. See how it went under the 30-minute wick? And then it closed towards the top. Do you see that? Do you see how this candlestick, once it went below this wick, the closing price, the high of this closing price was towards the previous close. And then the high of this closing price towards the previous close. The same identical pattern happened. And that was a pattern that I caught on, which was from June 9th's close, right? So do you see how that makes sense? That's how I was able to buy calls, and that's why I bought calls. And the reason why I sold it quick and I did not hold is because I do one 30-minute candle at a time. And I get in, I get out, I scalp quickly. And if you look at the pattern, it said it could continue to go down, but then overall go up. I'm not risking that. I'm playing it safe. I'm taking in my gains. And then from there, I called it because I looked at the pattern. I said, this can try to spike. And I literally called it. And then I tried doing puts like 2 times, very small losses. I knew it was a terrible idea. I advised against puts throughout the entire day after that. I was not with the whole put idea. I was only mainly focused on puts at the market open towards 431. So overall, it was a decent lead on direction for today, and I alerted calls at the lows. I also had a very nice trade where I alerted calls at 431, 400, and like when everyone was bearish towards the high of day, I was alerting calls, and I made a nice profit on that. But in terms of the video, like I had stated as well, in order for this to go bearish, it would have to go under 428.70, which never happened. And if it goes above 432, then the next resistance level isn't until 436 to 438. So there's no reason for puts. So I didn't do any puts on this uptrend. I did not get trapped in that sense. But that was the 30-minute pattern that I want to bring awareness to you. So you can visually see what I'm doing. I'm capturing patterns. I'm looking for these 30-minute patterns throughout the history, and then I'm capturing those patterns. Like you can just visually see, I mean, just look at it, guys. Very, very simple. Look at this candlestick right here. Look at this candlestick right here. What happens next 30 minutes? It goes under, and then it closes strong towards the previous highs of the candles. It goes under, and then it closes strong towards the previous highs of candles. So when you buy, when it goes under the 30-minute wick, when it cracks and everyone thinks it's bearish, when it cracks and everyone thinks it's bearish, you catch the pattern and then you sell into the rip. That's the game, man. So those were the overall trades that I ended up making. Now, how do we play this CPI, right? So in terms of the CPI, this is some tips and tricks. You need to wait. You need to wait to see what happens. It's not about being bullish or being bearish. You know, before CPI, we don't hold and hope. I don't do a lot of swing trades. You need to wait. Now, this is what we can say in terms of advance, right? So in terms of advance in some key crazy levels, let's talk upside potential. So if it were to go up, the main key level that we would be interested in if we were going with like a higher level would be this level right here, $438. 438, this triggered the craziest bull trap, man. 438, that is a phenomenal level. If SPY is going up tomorrow, 438, I'm going to be targeting puts. Now, let's discuss other levels. So if SPY gaps down, right, if this gaps down, what you'd want to do is you would want to wait for it to go back up towards 434 to attempt puts with a tight stop. And it would have to be a massive gap down, a massive move to the downside. That's what it would have to be. Other levels I want you to keep an eye on is 429.90. 429.90 is now considered a key support level. When it hits 429.90, they will try to bounce 430 calls in the money. I'm going to be watching 429.90 very closely with a tight stop loss. If I do play that idea and I get stopped out, or if I have a small win, then I'm just going to wait to my next key level. And my next key level for calls, we could see a little bounce off of 420. If it goes under 426, then they bring 426 calls back in the money when they were out of the money. Could see a bounce there. There's a lot of key support there, but it's already been tested and it's already been played out. That's the issue I have with that. Best level for calls would be 424. 424, absolutely love the idea of buying calls at 424. Like I said, man, in terms of the videos that I've been making, none of the bear trap levels have been hitting. So that's unfortunate. But in terms of my trading within Trader Society, I'm doing very, very well. This is another $4,000 profit today. And my ideas for puts have been working for the most part. You just have to scout them extremely quickly. And the level that I bought calls at was a level I was interested in buying puts at. It was one of the lower levels, but I didn't do puts because it was a bullish pattern. The pattern said when it goes under the wick, it's going to try to flip bullish. You know, you have to trade the price action. You have to trade the patterns. You have to trade what you see. You can't just post a video or post a watch list and post a level and say, I'm going to do puts here or I'm going to do calls here. You have to actually trade what you see. If there's a bullish or bearish confirmation, that could change the thesis. And then if it's confirmed bearish or bullish, you have to decide, are you going to sit on the sidelines or are you going to go against your overall plan and then just take a quick scalp in and out? And then that's a decision you have to make. Even with confirmation, some levels just don't make any logic to go against them, and I'd rather just sit on the sidelines in certain situations. But basically, 438, I would love puts. 434, I'm going to keep an eye on. If it has a massive gap down or crash, I'll do puts at 434. 429.90, if I do calls, super tight stop loss. I'm not playing. The stop loss would be at like 429.50, max pain there. But I am interested in a dip buy at 429.90. If that does not work out, you can keep an eye on 426, but that does not interest me because it's already worked out several times, but you can keep an eye on it for a quick scalp with a very tight stop loss. The level that interests me and that I've been waiting for, it just hasn't been hitting, is this $424 level. $424 is a very key support level on the SPY that has not been tested. I love trading at levels that have not been tested. I like trading levels that have been forgotten. People forget about them, right? Everyone forgets about 424. Well, when it goes to 424, I would love to buy calls in terms of making these videos in advance, right? If I see some sort of bullish pattern or some sort of bullish pattern and bullish price action, who knows? I might be buying calls at a level that I'm bearish at tomorrow. You have to trade the chart. You have to trade what you see, trade the price action. Nobody was expecting me to buy calls at the low of day when it looked bearish. Everything looked fucking bearish. No one was expecting me to buy calls there. I saw a 30-minute pattern that other people weren't seeing, and I took advantage of that. And that is something that I cannot bring awareness to in these videos. I can bring awareness to the patterns that I'm looking at in the recaps and in Trader Society in real time, but you have to use those patterns at the levels, at key levels, in some of the key levels that I give out. But you have to look for these patterns, right? But that's what I do, and that's my style of overall trading. And like I said, man, 438 puts, 434, only do puts if it has a massive crash or massive gap down. 429.90, quick scalp on calls. We could see a nice little bounce under 426 to bring those calls back into money. Best level for calls is 424. Now, in terms of my last thing, I'm going to say about the CPI, look for the overreaction. So this is very simple. All you do is you wait for it to have a massive gap up or a massive gap down. So if it has a massive gap up, we're interested in puts at 438 because that's a major resistance level where a bull trap is got created and it's likely going to crash. Now, let's just say if there was another level, say it's gapping up, say it's spiking. So it has a big move to the upside and then it forms some support. So let's just say, for example, it had a move to like 435. It went to 435, 436, whatever. And then there was support. There was support at like 434 or 435. This is your support. When it goes under this support and it cracks that support, wait for it to go back up to that support level. And then when it goes back up to that support level, you would short this V and you would buy the put options right here. This is where you would buy the puts. So what you can look for is you can look for a support and resistance channel to form and then an overreaction. So if the overreaction is a crack of support and it has a big crash, wait for it to spike back up, short that previous support. It should react as a lower high, react as a resistance. Now, in terms of oversold levels where this can bounce at, 429.90, 426, and $424. Those are the levels where it can bounce at. 424 is the best. Use very tight stops if you do the other levels. Now, I don't like this idea, but if this were to happen, this is something to keep an eye on. If SPY had a massive gap up and you would basically do calls where the bear trap was created. So wherever the bear trap was created, say it was at 433.80, it has a massive spike, a massive gap up, you would hit calls at that level with a super tight stop loss. I don't like that idea, but if it was a crazy gap up to like 438 plus, you can keep an eye on it, but I don't like that idea. The idea that I liked is if it gaps up, or if it's just trading in a little channel and then it has a massive crash and it creates a bull trap, wait for it to go back to the level where it created a bull trap and then short. That's the idea I like. Now, in terms of calls, you can keep an eye on 429.90. You can keep an eye on 426, which are tight stops, and the best level will be 424. So basically, how I view this in my mind is, this is how I view it. In terms of how I would love to play CPI, if it had a crazy move to the upside, the best level that I would consider for put options and to go short on the SPY would be this level, $438. $438, and the reason why I say 438 is it has not been tested, and this is a level that was previous support right here, and when it reacts as a resistance, it triggers a crazy bull trap. 438 would be my true best level for puts. Absolutely love that level. And if it doesn't hit and it's spiking, or if it's gapping up, like I said, all you do is this. You go in the pre-market or at market open, you see where the overreaction is in the pre-market 8:30 a.m. If it's trading in a channel, let's say it spikes up a little bit and then it bounces here, so your support is at the bottom, right? And then your resistance is right here, wherever it is. If it creates a massive bull trap and it sells off hard, wait for it to go back up where the bull trap was created at the support, not the resistance, not here. This is the resistance at the support where it was consolidating and bouncing before it created the massive crash, the massive bull trap, and then you short the retest. You short right here on the retest. If it does not retest, you don't short it. And then in terms of calls, 429.90 hasn't been retested. It could work. Bigger the overreaction, the better for that trade idea. If it goes up, then it's even better for calls at 429.90. If it just drops, then it's not as good. 426 has already been tested, likely going to try to bounce, but it's not a special level. 424 is a special level. That's where it should bounce. Look, man, we're going to have a phenomenal trading day tomorrow. This is setting up for an absolute home run on the analysis that I just gave you. This is going to be truly incredible, and I'm looking forward to trading this, man. We're going to absolutely crush it tomorrow. I'm looking forward to trading this. It's all about our key levels and the confirmations and the reactions and trading the chart and trading the price action and trading what you see instead of just blindly going into puts or calls at a key level. You have to be able to read the floor. You have to be able to read the 30-minute candles. You have to patiently wait to trade the best setups at those prices with confirmations. So I hope that makes sense. That is our game plan heading into tomorrow. If you want to be a part of Trader Society, it's going to be the first link down below in the description. Everything is explained in terms of what you get within Trader Society. It's all explained in the first link down below. You'll be getting access to the live trading streams, the live trading voice channels, the video lesson library that teaches you everything it is that I know about the overall stock market, price action, SPY, small cap stocks, penny stocks, how to trade price actions, how to master these trading strategies, these gap trading strategies, these gap trading patterns, how to use 30-minute candles. It's all in there, man. And you also get access to the Discord community, the networking opportunities, the moderators, all my real-time trade alerts, all my real-time trade ideas, all my real-time trade watch lists, all the real-time watch list analysis, right? So that's my overall thoughts. That's my overall analysis. We're going to absolutely crush it tomorrow. I will see you guys tomorrow live towards market open, and I'll be up early within the CPI as well, because we will be discussing our new pre-market plan when CPI is released. But this video helped prepare you for that as well. But in terms of the new levels and what to address, that will all be explained at 8:30 a.m. tomorrow.